Most Americans never learn who truly controls their money. Before the US became a superpower, a quiet deal changed everything. This one decision still shapes every American paycheck today. What if America's money wasn't truly public? And what if that wasn't an accident? In the early 1900s, America feared banks more than foreign enemies. Wall Street panics regularly wiped out American savings overnight. Farmers, workers, and small businesses suffered the most. Banks collapsed, credit vanished, and chaos followed. The U.S. had no central system to stop financial fires. Private bankers filled the vacuum with enormous power. Trust in money depended on trust in men. That trust was fragile and often broken. Politicians argued fiercely over federal banking control. Populists demanded limits on financial elites. Industrialists demanded stability at any cost. America stood divided over who owned money itself. Then a mysterious invitation went out. It promised secrecy, urgency, and unquestioned loyalty. The destination was a private island off Georgia. The year was 1910. Long before that, American money was experimental. Colonies printed their own currencies in the 1770s. Inflation and counterfeiting became constant threats. The Constitution gave Congress power over coinage. The 1792 Coinage Act formalized American money. Gold and silver became the nation's backbone. Banks multiplied as America expanded westward. The gold rush flooded the economy with precious metals. Booms grew bigger and busts became uglier. Financial panics hit in 1837, 1873, and 1907. Each panic devastated ordinary Americans again. The Panic of 1907 finally terrified Washington. J.P. Morgan personally rescued the financial system. One banker saving a nation felt dangerously wrong. Lawmakers feared the next collapse would be worse. They demanded a permanent solution. Behind closed doors, powerful bankers proposed one. Secrecy ensured survival of the plan. Public outrage would have killed it instantly. Names were hidden, travel disguised, records destroyed. The meeting happened at Jekyll Island. There, America's central banking blueprint was born. It would later be called the Federal Reserve. In 1913, Congress quietly passed the Federal Reserve Act. Control shifted subtly but permanently. Money became policy-driven, not purely metal-backed. During the Great Depression, the Fed gained more authority. Emergency powers became permanent tools. Confidence replaced gold as money's foundation. In 1971, Nixon ended the gold standard completely. The dollar became pure trust and global muscle. Today, Federal Reserve decisions shape American wages. Interest rates decide who can buy homes. Money printing affects grocery bills nationwide. Inflation quietly steals from savings accounts. Easy credit inflates assets, not paychecks. Rent rises faster than middle-class income. Debt becomes normal, even necessary. Student loans chain young Americans for decades. Wall Street watches the Fed like weather forecasts. Markets move on whispers from Washington. The dollar dominates global trade and reserves. America exports inflation worldwide. Families feel it in monthly budgets. Homebuyers fear every rate hike announcement. Retirees worry about shrinking purchasing power. Students delay futures under crushing debt. Workers work harder for less security. The system rewards asset owners first. Understanding money becomes survival knowledge. The 1910 meeting still echoes today. Its secrecy shaped a century of consequences. Final message. America's money was built quietly, but understanding it is public power.